Back to mining, Zimbabwean President Mnangagwa has commissioned a $35 million gold crush and recovery plant in Batanai Matsika district, a development set to give impetus to the Second Republic's quest to attain a $12 billion economy in the mining sector by 2023. In fact, here's a quote from the president where he actually said just that. He says, such investments are contributing to the realization of our mining sector target of a $12 billion mining sector by 2023. Joining us now from Harare is Batanai Matsika, who is a research analyst at Morgan & Co. Investment Bank. Batanai Matsika from Harare. Batanai, good afternoon. Good afternoon. You're an hour ahead of us. Thanks for joining us. The gold plant in the Batanai Matsika district, is that a symbolic gesture or does it hold practical promise, what the president just commissioned?
Thank you so much. So it's in line with a devolution strategy that the government has been running with for quite some time to say that they want to promote development outside the main cities, which are Harare and Bulawayo. So you're seeing that, the project has some economic impacts on the rural folks there in Mudzi, in terms of just the employment creation and also just some of the development that will come with that, such as the improvement in infrastructure, in roads, and things such as roads. So definitely, we expect some positive economic impact to come through with that plan.
Well, what do you make of what we're hearing is a partnership between local and Chinese investors to get this all through? Are the Chinese providing economic benefits through infrastructure investment in these mines?
Yes, so you find that Zimbabwe had adopted a look east policy, and it's been running for quite a number of years. I think the former president Robert Mugabe was actually open about that, to say that they will engage the east in terms of investments. So we've seen a lot of Chinese businesses coming in Zimbabwe, setting up shop in terms of mining ventures, as well as other businesses across different sectors of the economy. So yes, it's a reflection that Zimbabwe has indeed partners in China, and we're seeing that playing out even in the mining sector. So definitely, I think China has been quite instrumental, especially on the mining side. We're seeing also a number of projects in terms of road projects actually being run and developed by the Chinese.
And we saw that quote from the president saying that this is a pathway towards a $12 billion mining sector by next year, which is less than a year away. What do you make of it? Is this still realistic?
Yeah, I think the plan has been printed. I mean, the NDS-1 document. It also provides for what they are calling the Vision 2030. Which of course gives the government time to sort of meet the $12 billion target. But it's fair to say that mining remains quite key for a developing nation like Zimbabwe, given its contribution to forex receipts, one, and also the employment creation that comes with mining. So mining is indeed quite strategic for Zimbabwe, and that is why the government is really pushing that agenda, of course.
All right, let's ask you about tea. The Taganda tea exports, the performance, I guess, the half-year performance so far. Is this encouraging?
Yes, so you find that, from an merchandise exports point of view, Zimbabwe, received roughly around 6.3 billion from exports. So you find that minerals are quite key, so they contributed about 3.6 billion to that figure last year, 2021. And then agriculture contributed about $1 billion. But most of that is tobacco, and there's also tea in there. So it's quite encouraging that we're having Tanganda actually pushing their exports, especially during a time when we saw COVID-19 and some of the supply chain disruptions. But what's key is that, Tanganda has also been moving into a bit of value addition, which is quite key. They do have a pegged tea division that they're also running in terms of exports. So it's quite encouraging. It is not big in the grand scheme of things, but the good thing is that we have a company that's pushing the Zimbabwean brand, and it's also helping grow some of the export receipts.
All right, great stuff. Back to mining. The Kuvimba Mining House acquiring a 50% stake in the Great Dike investment. Is that, I guess, yet another encouraging move as far as the mining sector is concerned?
So we've seen Kuvimba Mining consolidating its position as a diversified mining group. So we're seeing that it's now in nickel, chrome, gold, and it's also looking and exploring other opportunities within the mining sector. I think what's encouraging from Kuvimba Mining is that some of the major shareholders are government entities or vehicles such as the Sovereign Wealth Fund of Zimbabwe, which is quite key given that there's need to sort of create generational wealth from a wealth fund point of view. And we've also seen this company consolidating its position, but also investing quite significantly in nickel, and we've seen production volumes actually going. And we also expect, some financing mechanisms to come through in the form of probably a mining, so that the general can have access to mineral resources from an investment point of view.
All right, I want to ask you about pensions. Why are so many companies failing to remit, pension contributions for employees?
Okay, so there are two issues here. One, you have to look at the viability of some of the promoters, right? So, of course, that speaks to the environment in Zimbabwe that has not been quite encouraged. But also, on the other hand, we have to look at confidence issues in the pension system by the end of the day. Remember, before 2009, that was the pre-dollarization era where we had hyperinflation in Zimbabwe. So we have a lot of contributors that put money in ZWL. But of course, when you moved over to a multi-currency regime or really a US dollar environment, there was a huge mismatch between pension fund assets and liabilities. So that ate into whatever value that they created to pensions. So there's a lack of confidence, but that also speaks to the inflationary environment. I mean, it's really difficult for pension funds to preserve value in an environment where inflation is now at 131% thereabout, and the month-on-month inflation is around 20%. So there are a lot of issues within that sector, but also issues to do with low coverage and also a lack of general confidence within the pension fund system.
Is that as far as outlook? Do you think that pension situation will improve? Does inflation have to decelerate and confidence have to increase for things to change?
Yeah, so it's really about a currency issue by the end of the day, because for as long as you are contributing your money in ZWL and inflation is quite high, it's very difficult to preserve value. But when we have a situation where we are sort of dollarized, or we have a multi-currency regime, and you're actually contributing in USD, and pension funds can actually find investment options in US dollars, for example, offshore investing, then it starts to make sense to have, to build confidence around pension funds. So it's really about a macroeconomic question and the issues to do with inflation within Zimbabwe.
All right. Batanai Matsika, Head of Research, Morgan & Co. Investment Bank. We thank you joining us live from Harare to discuss the issues coming out of Zimbabwe. Thank you so much.